No, we did not win an Emmy Award last night, but really, it's just an honor to be nominated. Investor Beat starts now. Thanks for watching. I'm Chris Hill. Just another manic Monday on Wall Street as it was red across the board. The Dow Index welcomed its three new components, Visa, Nike, and Goldman Sachs, all of which fell in their Dow debut. Joining me in studio today, Jason Moser and Bill Barker. Guys, our top story, it was a big day in the smartphone industry. This morning, Apple announced it sold 9 million new iPhones over its opening weekend, more than analysts were expecting. And this afternoon, news breaking that BlackBerry will be bought out by a group led by Fairfax Financial. Jason, let's start with Apple, the iPhone sales, certainly a different story from what we saw a year ago when the iPhone 5 first came out.
Yeah, it was interesting to see this because the iPhone 5 was rolled out to some relatively light fanfare. It didn't seem like it was that big of a deal. We're kind of not really sure how much better the phone
had. Debacle.
Well, yeah, that too. But I mean, I think that was the question coming into this rollout was how much better was the 5S and the 5C? How much better are these phones going to be? So maybe our expectations were a little bit low. I think the press probably did a pretty good job of keeping our expectations low. But with estimates of 5 to 6 million being topped up here with 9 million reported, that's a pretty significant difference there. Certainly not surprising to see Apple roll out a great product. Not terribly surprised to see it received well, and it'll be interesting to see how well it does globally as well.
On the other end of the spectrum, we have BlackBerry. We've been wondering for a long time now, what is the fate of this company? A 3% premium being paid to buy out. Where does BlackBerry go from here?
Well, yeah, apparently BlackBerry did not sell 9 million phones last weekend.
Right.
And that's part of the problem is just not selling very many phones compared to what they were doing and compared to what they are structured to do. So they're going to downsize quite a bit from here, appears to be the game plan by the acquirer. And so I would expect to see fewer and fewer BlackBerries, but probably less of an attempt to compete with Apple and Samsung and the more retail-centered product.
When you look at shares of Apple, is it a buy at this price, particularly if you think that this is going to be a trend for this quarter?
Well, first of all, thank you, Fairfax, for even eliminating the question of whether we have to answer whether BlackBerry is a buy, because now we just don't have to worry about that.
Right.
I was going to say no anyway. But with Apple, I do think it is a buy. I think it's just we have to adjust our expectations with a stock because it's a $500 billion company or close to it. It's not going to return the same kinds of returns we've seen since around 2008 when it brought in as much money during 1 year as it's going to bring in this coming quarter. So we're probably not going to see the 15 to 20% annualized returns, but the share buybacks, the dividends that this company continues to pay, I think offers investors a great sort of a stalwart company to keep in their portfolio, that'll help sort of absorb some of the volatility we're sure to see.
All right, let's get to some of the day's movers and shakers. Netflix shares taking a step back despite winning a Best Director Emmy Award for House of Cards. It is the first time an online video distributor has won in a major category. It's really been a great year for this stock. That's a little bit of icing on the cake, I guess.
Yeah, I think that the stock being down a couple percent today really back down to where it was Thursday. The stock had a good day Friday. Sold off just back to where it was 48 hours ago. I think it has been a great year for the company, in part based on the rolling out successfully of programs like Orange is the New Black, which we talked about earlier, and
House of Cards,
and whatever else is on the way. Seems to be a winning strategy, one that you can expect some of its competitors to show up with their own original programming too.
Pandora down after Apple said it has more than 11 million listeners in its new iTunes radio service. That's a fraction of what Pandora has in terms of overall listenerships, but still, that's a pretty big shot across the bow.
Yeah, it's a fraction, but you have to look at the fact that there were about 200 million or so downloads of the new Apple iOS 7 here since it's been released, which is 200 million. That's significant. I mean, that opens that iTunes radio audience right up. And the reason why Apple didn't acquire Pandora is because they felt like they might be able to do it better. And so that's what iTunes Radio is. I've surfed the product. I mean, as a Pandora user, I think iTunes Radio is pretty solid. And the nice thing is that Apple, their sales are not dependent on, 90% of their sales are dependent on advertising like Pandora's. So I think Pandora investors are right to be concerned.
Shares of Green Mountain Coffee Roasters falling in very heavy trading volume today. You look at what the stock has done over the last year, though. Is this just a little bit of profit taking?
Probably there's no real solid piece of news out there. Is there chatter in the background or some downgrade or something? I don't even know, because this stock can move 6, 7, 8% on very little. It is today. Most of the news has been good lately, but there's so many things out there about the accounting. It doesn't take much to get people nervous and to more short selling to come in at times.
And finally, Zillow down as well, also in heavier than usual trading volume. You look at this stock, it's kind of a pricey stock, I think 23 times revenue.
It's not cheap, Chris. It's not cheap. And
like housing itself.
Exactly. Citron Research recently came out with a report, I think, questioning some of their marketing expenses and whatnot. I haven't had a chance to read through that, but I think that when you see also Trulia pulling back as well today, I mean, there are some concerns with the summer selling season sort of coming to a close there, with interest rates bound to start pushing their way back up a little bit. That's probably going to ratchet back the home sales as well. So I think with a stock like Zillow, it's bound to pull back a little bit.
All right, that is going to do it for today's action. Let's look ahead to the rest of the week. Give me a stock I can put on my watch list.
I'm watching AutoZone. It's one that we own at Motley Fool Funds, and it's reporting middle of the week on Wednesday. It's had a great run for the last 15, 20 years. It is down a little bit since July. We'll see whether that's justified when the earnings come out.
All right, what about you, Jason?
Yeah, Carnival Cruise Lines has earnings coming out tomorrow. You know, they've just had so many bad headlines here over the last year, with ships getting stranded and people kind of left out there hanging. You know, it's been fascinating to watch the cruise line sort of industry develop. From 1990 to 2009, worldwide passengers grew at a rate of about 7% annually, but that has really slowed down recently. And you can see it in the gross margin line of these cruise liners. They just, gross margins are getting killed, so they're losing any pricing they have. I think it's probably a good stock to keep on your watch list as far not to buy.
All right, for Jason Moser and Bill Barker, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.